Thank you very much, panel. And may I now invite the team from Milliman, Safder and his colleagues to come and make a presentation on their Global Takaful Report 2017. Now, Safder has slowly started to colonize other parts of the territory. From family Takaful, he has also started to move into general Takaful, and Milliman is now probably one of the leading observers as an actuarial consultant of the scene. So I leave it to Safder and his team to make the presentation. Please. You have the report on your desks, all of you.
Yeah. Good afternoon, everyone. We're pleased to have the opportunity to launch the Milliman Global Takaful Report 2017 in London today. I'm going to discuss the key growth trends and penetration rates, and Safder will focus on the Middle East, and finally Farzana will consider Southeast Asia and the opportunities in the Takaful space. So firstly, let's look at growth trends. And just an introduction, this report is the first of its kind to provide a distinct analysis of the general and family Takaful industries. It covers markets in Southeast Asia, the GCC, including Saudi Arabia, Africa, and other smaller countries where Takaful business is in its infancy, such as Sri Lanka, Yemen, and Jordan. Just a couple of points to note, though, that due to the lack of available data, market trends have all been analysed using gross written contributions. And furthermore, the analysis has been carried out in US dollars, which means the aggregated figures are subject to exchange rate volatility. And that's particularly pertinent when we've looked at the Malaysian and Indonesian contributions. So moving on to the global Takaful market, this map shows the global gross written contributions in US dollars for general and family Takaful business combined for 2015. It also shows the compound average growth rates by region during the period of 2012 to 2015. And I think the key points to note is that the GCC and Africa exhibited strong growth rates for the combined business, and this is primarily due to a growth in general Takaful business, while Southeast Asia witnessed negative growth rates in US dollar terms. Again, though, to note, this is due to the impact of adverse currency movements, and that in local currency terms, there has been modest growth in the Southeast Asian region. We note that the 2015 global Takaful gross written contributions amounted to $14.9 billion US dollars. During 2012 to 2015, the market witnessed a compound average growth rate of 13%. This is much higher than is typically seen in the conventional insurance. And we note that the general Takaful sales dominate the global market, comprising 83% in 2015. The majority of the growth in absolute terms is due to an increase in GWC for general Takaful, with a moderate decrease in GWC for family Takaful business, again due to weakening of local currencies. However, as noted earlier, in local currency terms, there continues to be a moderate increase in GWC for family Takaful business globally. The GCC continues to dominate the global Takaful market with a 77% market share, and you can see that on the pie chart. And this is followed by Southeast Asia with a 15% share, and that's predominantly family Takaful business. Africa and the other remaining countries are relatively new to the Takaful market, and their GWC is small. But these regions continue to demonstrate strong growth in 2015 in percentage terms, given the relatively small starting GWC. Now looking at the general Takaful business in isolation, we note that the total GWC amounted to $12.3 billion US dollars in 2015, and an associated compound average growth rate of 16% over the period 2012 to 2015. Again, the GCC dominates the global general Takaful market with a gross written contributions of $10.8 billion US dollars, and more significantly continues to exhibit a compound average growth rate of nearly 20% despite the maturity of the market. The pie chart here indicates that the GCC comprised 88% of global general Takaful contributions in 2015, and it also exhibited the highest growth rate with a CAGR of 19% over the period 2012 to 2015. Outside of the GCC region, the size of the general Takaful business is small. Now looking at the family Takaful market in isolation, we can see that Southeast Asia exhibited negative growth in US dollar terms. However, in local currency terms, there has been modest growth. The GCC, Africa, and the other countries where the business is relatively immature have exhibited strong growth relative to their modest GWC levels. So the total global family Takaful GWC amounted to $2.6 billion US dollars, and there was a compound average growth rate of 2% during 2012 to 2015. Southeast Asia dominates the family Takaful market with a 57% share in 2015. Most of this business is written in Malaysia and Indonesia, and hence the growth rates are suppressed by the adverse currency movements of the currencies in those respective countries relative to the US dollar during 2015. However, in local currency terms, the growth rate experienced is much higher. Market penetration rate is a metric often used to indicate the level of development of the insurance sector within a given country. In our analysis, the market penetration rates are given separately for Takaful and conventional insurance business, and further split between family and general Takaful business. In Malaysia and Indonesia, the life insurance and family Takaful penetration rates are higher than that for general insurance and general Takaful, respectively. Takaful penetration is lower than that of conventional insurance. Thus, there are significant opportunities for Takaful operators to increase the market penetration by targeting the needs of the predominantly Muslim mass market. In contrast, in all of the GCC countries, life insurance and family Takaful penetration rates are much lower than that observed for general insurance and general Takaful. But similarly, the Takaful penetration rates are much lower than the conventional insurance penetration rates. Overall, the insurance penetration rate in the GCC is low. This indicates the high potential growth opportunities in these predominantly Muslim markets that are largely uninsured. I'll now hand over to Safder to talk about the Middle East.
Thanks. I will focus on the Middle East, and then Farzana is going to talk about Southeast Asia, because these two regions are distinct. GCC is where we see the general insurance growth or general Takaful growth, and Southeast Asia leads on the family Takaful proposition. Say that Saudi Arabia as a market in itself is considered, as far as our report is concerned, as 100% Takaful. So that slightly distorts the picture. So what we decided to do in the report is to segregate the analysis for Saudi from the rest of the Gulf. And bear in mind, with the almost 15 billion, 14.9 billion total gross contribution in 15, almost 10 billion comes from the kingdom. So if you are to remove that, effectively, what remains of Takaful is 4 to 5 billion. 4 to 5 billion US dollars compared to more than 4 trillion from what you saw earlier as far as the global conventional business is concerned. So it's literally a drop in the ocean. As far as the growth in the GCC is concerned, again, you can see the penetration is very low. Bahrain probably has the highest level of penetration, 25% general Takaful, 5% family, so almost 30% of the total insurance market is Takaful. And the rest of the Gulf is literally around 10%. So there's still, obviously, the conventional base that is solid and Takaful. And that's why when you see significant growth in Takaful, you are starting from a virtually zero base. So you would expect those growth rates. Again, this is just bifurcating the different countries within the Gulf, and UAE dominates the space. and the UAE market premium is reaching $1 billion mark, and part of that is driven by the compulsory health requirements in the Emirates, Dubai and Abu Dhabi. Dubai in particular with the DHA evolution over the past couple of years. So that is driving the bulk of the general as well as the family takaful, because some companies offer medical under family takaful, some of the companies offer medical under general takaful. As far as Saudi Arabia is concerned, and we heard the Basim allude to that earlier, the entire market is considered as cooperative model, takaful, and hence the growth rate is a representation of the entire industry, is almost 20% year in, year out. Again, it's dominated by general takaful, and life insurance penetration is almost zero in the Kingdom of Saudi Arabia. Huge opportunities for life companies who want to move forward in terms of taking the opportunities for the 2030 vision that is materializing. I'll talk about that a bit later. Now, this is where the challenge is. We have been hearing a lot about the top line. The question is, what about the bottom line? Are these companies making money? And that's going back to the second presentation that Mahesh presented earlier. Takaful companies in the Gulf are facing major challenges. So just looking at GCC, excluding Saudi Arabia, reinsurance ratios are very high. There's a huge dependency on reinsurance. Average claims ratio in 2015 was 86%. This is incurred claims over earned premiums. Average commission rate is 12%. Expense ratio is 15%. So the combined ratio is well above 100%. Most of the takaful companies in the Gulf are burning their capital year in, year out. And this is why you find a huge regulatory involvement when it comes to some of the takaful companies in the region. We heard two examples of success stories, QIIC and Abu Dhabi National Takaful. These are exceptions. If you look at the 39 companies in the market, most of them are struggling, burning their capital as far as the takaful proposition is concerned. The story in Saudi Arabia is different. 2013 was a challenging year, and that is when the regulator intervened and asked the companies to correct their IBNRs and reserves, and it was that one-off year. But now you can see consistent profits, combined ratios within the 100% mark, return on equity also respectable. So it's a different market out there. So to put this all together, what is the future as far as takaful is concerned in the Gulf? Is there a future? Is there light under the tunnel? That's the big question. We will talk about the strengthening of the regulation that may help in this regard, corporate governance and policyholder protection, and pension reform that is seen or perceived to be an opportunity going forward. As far as opportunities are concerned, it's a largely underpenetrated market. As I say, it's almost 0% penetration. So clearly, any company that has a solid proposition has a good chance for compounded growth, double-digit growth over the years to come. Said that, you need to take the opportunity of what's mandatory out there. Motor and medical are the two compulsory lines, and you find everybody going for the same pie. And this is where the takaful companies also fall into that very trap, that this is where we are going to make money, not realizing, or probably realizing too late, that it takes a while to set up a company. You have established companies with expense ratios below 10%. And when you start up with 20 to 30% expense ratio, how are you going to make money? So you need a unique value proposition. We heard that earlier. Opportunity in the retirement space is there. Institutions in these countries have started talking about the retirement space. The oil prices do not help. In the 2030 vision, we heard about the initiative on national savings in the kingdom. These are opportunities that come. End of service benefits. Pension is something that is unheard of in terms of saving for pensions. The local population is taken care of. But now things are changing. The aging of the population, the younger population that is going to age over time, the potential deficits that these superannuation schemes are going to face in the years to come is finally haunting institutions out there, and there is some radical thinking going on as far as the pension industry is concerned. And this is where probably players who are smart can move forward and provide a value proposition that may be unique in the space, in the Takaful space. Regulation is changing very fast. The risk-based capital regime has kicked off in UAE and in Qatar, and we will be seeing something evolving in the kingdom very soon. That has tightened the space. Corporate governance is being introduced. And there is a hope that the reforms are going to continue. But as far as the challenges are concerned, there is intense competition. The Takaful players are playing in the same space as conventional players without any unique value proposition. That is not sustainable. M&A activities have started, but the biggest question on an M&A activity is that if I want to acquire something, there has got to be a value in that company to acquire, rather than the company paying you for acquiring itself. So this is where the challenges come up. What is the present value of future cash flows of this company? It's tough. So, this is where the challenges come up. You want to consolidate, but how do you consolidate in an environment that is pretty gloomy as far as the future cash flows are concerned? Products are complicated. The same products are mimicked on the Takaful space. And there is very little additional unique value proposition out there as far as the Takaful industry is concerned. The same unit-linked products that are offered by global players are offered in the Takaful space. Consumers don't understand the intricacies of unit-linked products. This is where the regulators just intervene. There is no disclosure. When I'm buying a policy, I do not even know how much commission has been taken by my agent. That is the environment in which we have been operating. It is changing, but it's going to take a while. And last but not least, expertise and skill, human resources continues to be a challenge in the GCC. I hope Farzana is going to present an alternative perspective of Southeast Asia, because the only thing between you and lunch is Farzana. So over to you.
Yes, I'm clearly aware I'm standing between you and lunch, so I will try to wrap this up within 10 minutes. So I'll be talking about Southeast Asia. We'll start off with Malaysia. Malaysia, as I think has been discussed earlier, it has the largest family Takaful market globally. But within Malaysia, the Takaful market share is still, not the majority. It's only about 12% in terms of GWC. But in terms of new business APE, it's roughly about 20%. So in terms of proportion, it is growing. It is getting more dominant. And we talked about the issue of local currencies depreciation against the US dollars. So in Malaysia, there was a drop, about 19-20% over the last 3 years. So even though the report actually shows a negative growth in US dollars, however, in actual local currency terms, that the market's actually growing. So we actually then split the analysis looking at family and general. Just talking first about general Takaful, generally the say about three to four companies are actually dominating the market. So you've got Etika Takaful, which is a local company, and Syarikat Takaful Malaysia, and Zurich Takaful, which was previously MA Takaful and followed with Takaful Ikhlas. And they jointly make up about 90% of the market. And the market is 2/3 motor and fire. We then look at family Takaful. I think Malaysia's got a bit more data compared to other countries, so we were able to look at new business ACE, which is actually the more common way to measure growth for family Takaful business or life insurance business. So what you can actually see is that for family Takaful, there's actually a strong double-digit growth in terms of new business ACE. Top four players, Etika, Prudential, Syarikat Takaful Malaysia, and Takaful Ikhlas, they make up about 70% of the market. The growth in the Malaysian market as a whole actually majority comes from the Takaful business. There are a lot of multinationals who are interested to actually enter the Takaful space in Malaysia, but regulators are actually not issuing licenses anymore. So the only way for multinationals to enter the market now is via acquisition. So you hear a lot of press, such as Allianz trying to take over HSBC Amanah, Zurich purchased 100% of MA Takaful, because that's really where the growth prospect is in Malaysia. In terms of products, majority of products are credit-related products, so that's like your mortgage business. and unit-linked business. And the reason for that, for unit-linked business being popular by companies, is because of the risk-based capital framework. And unit-linked business actually has one of a low capital requirement. So once RBC was introduced, you could see companies shifting from traditional products to unit-linked products. In terms of channel, agency still dominates, but we're seeing increasing proportion of banker sales as well. Now, moving on to Indonesia, we are seeing growth in the market. They also suffer the same depreciation in the local currency compared to US dollars. There's a large number of Takaful operators, but majority of them operates via the window option. But there's a new regulation that requires companies to spin off their window operations to a standalone entity by 2024. So that's a big driver of potential growth for the Takaful or Sharia business in the Indonesian market. As far as we understand, the regulators, the OJK, which is the regulators in Indonesia, are still issuing licenses. So, companies would be able to get licenses if they want to enter the market. So it's not as difficult compared to Malaysia. So again, looking at family Takaful versus general Takaful, family Takaful, the three multinationals really conquer the market at 70% of the market, and it's mainly unit-linked business. Whereas general Takaful, they are mainly the local players and still focusing on motor, personal accident, health, and property. We then have a comparison on the financial ratios. What I just want to highlight here is basically to look at the claim ratios versus what Safder presented in the Middle East. Generally, the claims ratio that we observe in the region is much better. So it's much lower compared to the Middle East. And it might be due to better technical underwriting, better corporate governance, stronger regulations. So it does help with a better bottom line for the companies in Southeast Asia. So what are the trends in Southeast Asia? So there's a lot of changes in regulations. So in Malaysia, companies are composites. So basically a company selling both family and general, they are required to split by 2018. So we're expecting some restructuring going on for most Takaful companies, because most Takaful companies in Malaysia are composites. And I guess the question is then, what happens to the general Takaful business? Because in Malaysia, most of the composites focuses on family Takaful business. So they usually have a very small general Takaful business on their books. And then on top of that, in Malaysia, we are having a phase de-tarification approach going on at the moment, which will create potentially a more competitive environment in the general Takaful space. So it will be a challenge for general Takaful companies to compete in that space, given that most companies wouldn't have the economies of scale to survive as a standalone entity. Then you've got the life framework in Malaysia. So what the life framework is about is basically increasing penetration rate through various means. One would be increasing sales via non-agency channel. So in Malaysia, it's very much focused on agency. So the regulators want companies to diversify, like selling products online. There's also an issue with the minimum allocation rate. So what this is about is when companies sell unit-linked business, now there's a requirement of how much a proportion of that premium needs to be allocated to policyholders. So what that means, if in the current product design, where it's front-end loaded to meet commission and expenses, most likely companies will need to redesign their products to do a back-end loading products. It is a challenge, especially for Takaful companies, because they are small compared to conventional companies. They are still in an expense overrun position. So having this new requirement is going to lengthen the expense overrun position. So it's more penal for the Takaful industry, given that it's it's a younger industry compared to the conventional business. So that's the challenge that Takaful companies have to face in Malaysia. Now, in terms of Indonesia, we already talked about the spin-off requirement. Some companies have started the spin-off process. I think there's one or two that's already received has already done the spin-off to become a standalone company. And then there's also a case of a lack of retirement products with longevity protection. So in Malaysia, definitely, most of the retirement products are something that provides a lump sum payout at retirement age. So if you spend it all within a few years, then that doesn't give you any protection after the money's run out. So just quickly on opportunities and challenges. I mentioned before, speaking to the multinationals operating in Malaysia, their growth that they observe is really coming from the Takaful business, because the mass market, which is largely the Muslim market, is underpenetrated. It is an untapped potential. And Malaysia's lucky because we get the government support about growing Islamic finance and Takaful business. So we're very fortunate that way. But there are challenges as well, with the new regulations, so there's going to be a lot of compliance exercise. Also very limited differentiation with conventional business. And similarly with Indonesia, it's one of the largest Muslim population in the world, very low penetration rates. So that's a huge opportunity. But the challenge that they face is that they don't quite have the government support or the political will that we see in Malaysia. So just wrapping up, I think this is just a snapshot of the market summary. Basically, we're seeing a trend of, a strengthening of regulatory environment. In many countries, they're moving towards risk-based capital, better corporate governance, and there are new regulations that are encouraging companies to grow their Takaful business. And that could be, for example, for Indonesia, where they're requiring the spin-off. So companies would focus it as a company rather than a product within a wider conventional and a Takaful window structure. On top of all these challenges, these regulatory compliance challenges, we've also got global regulations. We've also got IFRS 17. That is a major issue that's facing the insurance industry at the moment. And that will just change how insurance and Takaful business operate. I guess his first question is Takaful, how should Takaful be treated under IFRS 17? Before the reporting would be focusing, the KPI will be focusing on top line. But in IFRS 17, you don't show top line anymore. You show your profit margins, your emerging profit margins. So it will change how companies would report their business and change their KPI. And how ready is the Takaful industry for IFRS 17? We talked about retirement market. There are various opportunities and challenges. It's really an untapped market. There is a need for a good retirement product. It is not something that's an easy solution. Most of the developing countries are young, so I think, but I think as an industry we should think about how to solve this retirement issue and provide, good coverage for the population. So just wrapping up, last slide on conclusion and future outlook. Overall, I think, from our observations, the growth continues. There are some slowdowns in some markets. Like in Malaysia, we do expect a low to moderate growth this year. But in other markets, such as especially the Middle East or Africa, we see huge potentials. You've got tightening of regulations around the world, so companies would be focused on compliance exercise, so that again would dampen growth. But hopefully that's something that's beneficial in the long term when companies have better corporate governance, so there's more trust in the industry. There are also new regulations, so we've got new countries having Takaful regulations, which assist growth. And lastly is back on the retirement product offerings. Again, that's something that we need to consider, but it also boils down to the regulations on these products, and they need to be conducive to make retirement products work under Takaful. And that concludes my slide. We are around today and tomorrow, so we're very happy to take questions and discuss the report. And we hope you find our report useful and insightful. Thank you.